Well, thank you everyone for joining in today. I'm so excited for this episode. We have a good friend and close advisor to the group community, Greg Henry, who's the CFO of Couchbase. Greg, thanks so much for joining us today.
Thanks, Brandon. Appreciate the Crew Capital team for having me. Looking forward to it.
Yeah, we've had this on the books for a while, and I've really been looking forward to it. Greg, one of the things that's most interesting about you is really just the background that you've come from. I mean, you've been from the start of your career an audit staff member at one of the largest advisory firms on the planet, and then went into the finance profession at General Electric, healthcare, onto ServiceNow. I mean, such a deep and wide career. And I'd love if you could just take maybe the first couple of minutes of the episode here to walk us through that journey and how you ended up to where you are as a CFO.
Again, appreciate it. And yeah, look, when I look back, and I've been doing this for 30 years, which is a long time, so I have a little perspective now. Look, when I was at university, I wanted to, be in business. I kind of just knew that from the start and got an accounting degree. I knew that'd be a great place to start. I could get a CPA and I could have that optionality if I wanted to go back and get an MBA or something of the like, or just keep going. I ultimately just kept going. After 5 years, as you mentioned, Ernst & Young, landed at GE and really enjoyed what they had to offer at the time in terms of opening my eyes to being a more global leader. They had amazing, training leadership programs that I took advantage of and really helped me grow. And I worked alongside with really some of the really best and brightest, people in the world at the time. And, after 14 years and I made several different moves, both in the United States and I lived outside the United States, it was time just from a family perspective and career perspective to make a different move, and got a call about coming to ServiceNow in the Bay Area. And I figured that'd be a great place to, put myself down for a long period of time and sort of run out my career, if you will, and not have to maybe move around as much anymore. Landed there, got a great chance to then go from this large organization with amazing processes and rigor and just well-built machine to seeing it wasn't really a startup. ServiceNow was public, but just seeing this hyper growth, hyper scaled, early stage public company and what they had to go through. I liken it to being on an airplane. I felt like I was getting closer to the cockpit. And as I got closer to the cockpit, I ultimately wanted to have my hands on the wheel, if you will. And so ultimately left and joined Couchbase over 7 years ago to take the CFO role. And look, when I joined Couchbase was 200 people, 25 million in revenue, pretty early stage. And, today we're over 200 million and almost 800 people and gone to the public markets. And while I've enjoyed all that large company experience and I can really leverage that now, I couldn't imagine at this point going back into a large organization. I really like the smaller company and the startup ecosystem, which is why I'm thrilled to have connected with the Crew Capital team.
I also made the transition from large public company into the startup world over the last decade. Any challenges or shocks that you faced going from GE, which is, at the time, one of the largest employers in the world, particularly their healthcare practice, to, companies like ServiceNow, which were a step function difference in size, down to Couchbase, which was, really de minimis in terms of number of employees and revenue relative to the scale that you were at previously?
Yeah, it's a great question. I had two, actually. The first was I'd spent 14 years at GE, and at the time, GE had 300,000 employees, right? It was one of the largest companies on the planet. And you spend a lot of time and energy building your network, but it was all an internal network, right? I mean, it was who do I know? And it's part of, how do I, sort of build my base of support so I can continue to get larger and more important roles. And then when the day you step outside GE, you realize, or I realized, I didn't have an external network, right? I've been working all this time, energy, spending it on the GE network, and I had no network outside of GE. So that was one, and I had to sort of start from the beginning. And that's why it was wonderful that I landed in the Bay Area in this tech ecosystem, because I found it to be very open, very welcoming and friendly to, to creating that network. The second one is at GE, because it's so large and things were so well built and well oiled or whatever, that what you really owned was just a really small fraction of a piece. And so if I go back to that plane analogy, I felt like in retrospect, I was more air traffic controlling just to make sure the planes didn't, crash into each other. But I really wasn't driving the plane because it was such a large company. And I really liked that feeling of being able to be on the plane, fly the plane. And so in retrospect, it was important work that I was doing, but I couldn't have made the changes and decisions and changed the direction of GE for as much as I would have tried at the time.
My experience was certainly similar for both the pros and the opportunities.
I should say I wouldn't trade my experiences. Don't get me wrong. That's just what I can reflect back on now. But I loved my GE experience. It just was just a learning once you step out of it.
And so, Greg, from GE Health to ServiceNow, which is in the IT ticketing space, to Couchbase, in the database market, maybe talk to us a little bit about how you found Couchbase, what you were excited about in terms of what the product was, the market they were going after. Like, what did you see when you originally joined?
Yeah. So when I was going to make that move, having come from this large public company to this hyperscaling, also public company, I figured if I was ever going to go and do a quote unquote startup, and there's obviously various definitions of startup, the time for me personally was right then. And so what I was looking was for something that was sort of earlier stage. I was looking for something that had a huge TAM, and that the offering that was developed or developing really was differentiated. You could build a moat around it. And ultimately, I think most people realize that the database market's one of the one of the largest and most defined markets in the space today, in the technology space today, 130 billion and continuing to grow. And I thought that it was the time, this was in late 2016, when this NoSQL, relational to non-relational technology was starting to emerge. And it just felt like that was the right time that Couchbase had the opportunity to emerge ultimately as one of the key players in that space over the next, decade plus.
I mean, the database market, to your point, I mean, so many large companies, titans of industry, have pioneered that market from Oracle, SAP, Amazon, and Microsoft. How did Couchbase manage to carve out a niche for itself in the beginning of your history there?
Yeah, it comes back down to the architecture that was chosen probably back in 2010, 2011. Couchbase is actually the formation of two companies. There's a company called Couch One, which was a JSON document store database, and there was Membase, which was from the Memcached open source, which is a key value caching. So it was bringing those together. And our first investor from Excel saw what in the early stages, because he had worked with Facebook, and saw what they were doing with data, and he thought that would be really powerful to take the caching technology to layer in front of the legacy, all those names you mentioned, the legacy technology, get the benefits of NoSQL before it moves into the document persistent data store, and that's how it would sort of play out over time. And we've seen that now. I mean, if you look at the predominant NoSQL players in the market today, other than the hyperscalers, which is Couchbase and MongoDB, that document store database is the one that's really the predominant one. So, it's played out pretty well as to how that was, being forecast. And I just like the fact that we were going from this, legacy technology. Yes, Oracle had this obviously command on the market and done amazing and hugely profitable. But the technology was changing because it was 20 or 30 years old at the time. And I could just see where this market was going to go again for not only a decade, but it could take decades of this billion and billions of dollars of database spend to move over to a NoSQL environment.
And so, Greg, I mean, in your time operating, there's a clear delta between the things that drive, product strategy and where a market's going. And those are always amazing catalysts and tailwinds to something that teams are building. And then there's the operational things that, it's really where the rubber hits the road. You can have the best idea in the best market, but if you don't make the right tactical decisions day in and day out, you're not going to be able to take it to market appropriately. You're not going to be able to service your customers in a manner that, they see fit. You're not going to be able to renew those customers. You're not going to be able to attract great talent. So, along that 7-year journey with you, what are the things that you recall operationally day to day that allowed you to have success on what was a really great vision and a great niche?
Well, look, Brandon, I'm sure like most companies, this was not a straight line that went up and to the right. There was a lot of, peaks and valleys as we went through this, and it was really learning through those. Because myself, I was a first-time CFO when I joined. Matt Kane, who's our CEO, was a first-time CEO, so we had a lot of learnings right as we went through this, and we hit some bumps along the road, and we just learned from those. Because yes, the market's big, and we felt like the product was good, but there were certain things along the way that, from a go-to-market perspective that we needed to augment over time. Ultimately, we needed to build, instrument the business so we could actually have predictability. That wasn't there when we got here, and it took us a little bit of time to sort of figure that out. Those are the biggest ones. Is do you understand how your business runs? And to your point about like how much can you renew your customers? How much can you upsell your customers? What kind of new logo activity? You have to understand all those pieces and look at history to be able to create this predictable model. And then do you have the right go to market, right? And so, look, for Couchbase, we feel like we're in a great spot now, but we just came out with our as a service offering, our managed service offering, a little over 2 years ago, called Couchbase Capella. And before that, we didn't have it, and we were a little bit late to market. And we saw what happened by not getting that out timely. Now we had other things to address, but nonetheless, the market was going that way, and we're there now. But in retrospect, we would have all liked to have done it a little bit earlier. So seeing the market, where it's going from a product perspective, do you have the right go-to-market fit, and then can you instrument and predict the business?
Yeah, on this point around managed service offerings and taking things to market at a certain period of time, I think this is something that might be really relatable to a good portion of our audience, many of whom are early stage companies, founders, executives. What could you share about uh, open source projects early in the life cycle of commercialization, launching things like managed hosted services, and trying to get to commercialization of those projects? What advice can you share?
Yeah, just on the open source, well, I'll start there. It's pretty interesting. So when I joined again in 2016, there was still question marks in the sort of ether of, can an open source business model even work? I think now we're down the road far enough that I think it's been proven that it can, because there's several companies that have done it. I think from an open source perspective, it's just you got to understand the license model, and will somebody else be able to come in and and take that code and do something with it that could be competitive with you, or do you have the ability to control your open source community and really be able to manage that cleanly? And we've seen multiple different models, and the ones who were a little bit more open at the beginning, I think they've been challenged a little bit, and you see them sort of changing their models. In fact, we saw one of our competitors just continue to change their model last week. So making sure you really understand the open source model. On the managed service, look, we've always been a cloud company. I think everybody today knows they have to be cloud, but for the database in particular, unless you're scaled, managing a series of database administrators, managing the database isn't core to what most companies do. And if they can pass that off, and actually they can actually save money by not having the human resources and having to deal with the infrastructure. It's almost the same thing as when we all started going to the cloud and getting rid of our data centers. It's the same thing. Like, I don't need to be in the management space of this, and I'd rather move to a consumption model where I'm not having to pick a year out how much I want to pay for. I'm going to pay for what I can see today, and if I need more, I'll come back and buy more at a later time, and not have a waste, if you will, of my investment.
Yeah, which is an amazing value proposition to a customer. I mean, it's great value. Um, I wanted to ask you a little bit about how you and the Couchbase team view the opportunity ahead as it relates to artificial intelligence.
Yeah, I mean, we think it's going to be the next, you know, big revolution, and it's already happening today. And I think we feel like we're well positioned. So the one thing, when we created this sort of underlying architecture, I told you about these two companies coming together, over a decade ago, we intended to build what we believe is the most scalable and performant database. And as you think about the demands that AI is going to have, I mean, we keep hearing about NVIDIA having to come out with more scalable, more powerful chips to power all the AI that's going to happen, particularly around AI applications. We think we're going to need a more powerful and scalable database to go with it. And so that's where we're set up. I mean, just in the last 8 months, we launched our Capella IQ, which is a co-pilot to allow developer efficiency. We launched a product called Columnar, which is analytics. And again, in the database space, there's really two pieces. There's analytical databases and operational. Analytical is sort of batch offline processing. If you think about a Snowflake or a Databricks, operational is what Couchbase does, but you need some level of analytics, real-time runtime on the database to basically serve up, information and other things. So we added that, and then we just came out with our vector search capability, which is essentially the ability to take a simple question and get multiple answers. So let's say, Brandon, we want to match the shirt you're wearing today. You want to buy a pair of shoes that matches that. I can take a picture of that right even today before AI, and you can say, okay, well, here's some gray shoes that match that. But I also want to know things like I want to set a price point target. I want a certain size. I want it within 10 miles of where I am. I want to know that there's inventory in stock, and all these other pieces and elements that's got to come across the database that wasn't available before vector search. So this is some of the AI things that are going to happen today with Couchbase and with databases in general that are going to power, all these AI applications that are just spawning now.
Yeah, it's an amazing narrative, one that I'm sure, customers, employees, and investors are all equally excited about. So I think we're all eager to see not just what the future holds for the company, but what you guys are able to service to your clients at the end of the day.
Yeah, we're excited. We're excited, and it's just early days. I mean, all this AI buzz. There's just early days for what's happening. This will take a while, but it's going to be amazing.
Yeah. You know, Greg, you were obviously, as CFO, instrumental in taking Couchbase through its initial offering. And I'm curious, we've got so many growth stage companies right now that are in this really unique period of time where, they probably got the right amount of scale. They probably have decent enough metrics, following a lot of restructuring and changes that have occurred since 2020, 2021. And just as a result of where sentiment is in the public markets, there hasn't been a lot of IPOs. Valuations in the public markets might not match up the last rounds of private company evaluations. What sort of advice would you give to other CFOs or even CEOs of companies in those positions, of which I'm sure there are thousands, and how to think about, their IPO, what it might entail for them in terms of workload and emotional strain and just handling some of the unique dynamics that exist today?
Yeah, it's great. It's a great question, and obviously, I have some better perspective now, having done that almost 3 years ago. And what I would say is the thing we try to always focus on. We'd have so many people at all hands going, "When are we going public? When are we going public?" And they were so fixated on this IPO thing. But while that's an important day, it's a single day, and then you get into your public company journey. And so the biggest thing I would say is I would focus on being public company ready more than anything else about the IPO, because like you said, a lot of these companies are ready scale wise, metric wise, but if you get there and you're not really public company ready, it's not going to ultimately be successful if you can't forecast your business, if you don't have predictability, if you don't have the roadmap and the pipeline to kind of keep going. It's not going to be worthwhile to do that. I also believe that it's very individualistic for companies on when they should or want to go public, and it should there's the metrics, but there's also, I think, at least for us, we had a feeling of what was right for us and the right time, and I would trust somewhat of your gut around that and not automatically be swayed by, well, you've hit the metrics, let's go. If you don't feel you're ready, then it's not the right time to go. And again, if you have to wait an extra 6 months, a year, whatever, I just don't think it's a bad thing. You really have to feel like you're ready from all angles. And look, there are different demands when you get to be a public company. There's some good and bad to it, right? I mean, you are on a regular quarterly cadence. You are meeting with investors. You are having to deal with, putting guidance together and run a beat and raise cadence. And, one of the things we did is we ran a good guidance process, but we didn't really run the full beat and raise, like doing it all the quarters out. And so again, if I was going to do it again, I would just have such a better sense of doing that. And that's part of what I call that's part of the public company readiness is, are you really ready for, all the things that come with that? So I personally, while everyone's excited and wants to do an IPO and be a public company, it's certainly and it's easy for me to say because I've done it now, but I wouldn't rush it. I would make sure that it's really the right time and the company's ready from all angles.
Look, Greg, if I'm a, if I'm a, first time CFO of one of these growth stage companies, I'm getting pressure from, my founders, my CEO, my board. Everyone's telling me, hey, the window's going to open, the rate environment's going to be stronger, valuations are going to be more favorable in the future. Like we need to really push the pedal on this. What are the things that you can do, not having been through those exercises before, not having run a beat and raise type of process, not having gone through IPO readiness before? What can I do to ensure that I'm, me and my team are checking all the boxes? One, but two, to the extent that we're not, provide that feedback and kind of put up a fight against the mounting pressure from, seemingly the entire world around you.
It's a great question. And look, when people used to come up to me and say, "When are we going public? When's the IPO date?" I'd say, "I'm not exactly sure, but what is it that you're trying to get out of the IPO? Like, what are you trying to achieve? Are you just trying to say, I work for a public company? Are you trying to get liquidity? What are you trying to solve for? Because there might be other ways to solve for those things without necessarily the IPO and being a public company. So it's really, again, underlying the what somebody's desire is to be a public company. At the same time, look, I've been part of a few CFO networks that have been incredibly helpful, and I've gotten close to a few other CFOs that had gone through the process that really helped me. And so I would encourage anybody who's a CFO of a company that, even if you believe whether you're ready today or you think it's 2 or 3 years out, build a network of folks that you can rely on and lean on, that you can call during when you get into it. I mean, the example I've given a number of times is, for as many times as I talked to other CFOs, the one thing that was tricky or challenging for me is no one ever talked about how you build the syndicate that's going to take you public of the banks. It seems relatively easy of picking the lead left and lead right, but doing the rest of the syndicate and making sure economics work out and you can get who you want to get, there is a little nuance to it. And I had to sort of learn through that process. And so again, the more people you can talk to, I think the more you'll understand that some of these different things that, yes, you have to pick a lead bank. Yes, you have to pick a good law firm. Yes, there's typical things, but find the things that are like less well known and figure out, how do those work for each different CFO.
Yeah. Greg, I think UiPath and Couchbase went public around a similar time in 2021, and as you and I both know, the ride since then has been volatile, extreme ups, extreme downs, and not just in terms of valuation and financial metrics, but emotionally, I think for both of us and maybe our employee base as well. Yeah, maybe you could talk about a little bit of that roller coaster ride and um, how you guys messaged and communicated to your employees to ensure that everyone saw what they were really shooting for at the end of the day.
Yeah, it's a good one. And by the way, I used to work with Ashim Gupta back at GE in the GE days. So know Ashim from then, and really happy to see the success he and the UiPath team have had. But yeah, I mean, it was
Ashim and I have both put on a little bit of weight and gotten some more gray hairs in the 6 years we've been working together.
Brandon. You can look at me, gray hair. I view as a good thing because we do have hair. So just know that. So be proud of those. No, but look, we did go public in the same year. I've obviously followed the UiPath journey, and we were really subscale, relatively speaking, right? Particularly to like a UiPath, but we wouldn't change it any way because we thought it goes back to we thought it was the right time for us. We wanted to go public. We viewed it as a marketing event, sort of a coming out. We felt that it would allow customers to see into our business and our financials that would get them more comfortable with where we were on the journey. And the fact that we could actually then give RSUs to the employees, we thought was a huge benefit. But going back to the journey we've been on for now almost 3 years, we've always come in with, Matt, our CEO, came in with this sort of key three pillar thing, which is sustained differentiation, profitable growth, and world class teams. And literally, he launched it the first day he got here, also 7 years ago, and we keep focused on that. Now, there's some bridging out points of that, but that's the key thing. So keep focusing on your differentiation. That's going to win the day. You need to focus on profitable growth. You have to find the right balance between profit and growth, and it's obviously way more relevant today than it even was when we put this in place back in 2017, when it was growth at all costs and it didn't matter how much you were losing. And then the people, focus on the people, the culture, the values. If you do all those things well over time, you will see success. And that's what we felt like we've delivered over the years. Now, again, it took us a little while to get everything together from a product and go to market and all that. But we feel like we're there today. And that sort of that foundation has really got us to where we're going. And then now we can add on things that are going to drive inflection, for the next, several years or decades. So be focused, stay on that. You're going to see ups and downs. And to your point, look, we had all these people that wanted to go IPO that kept asking me about IPO. And then they'd come to me afterwards and say, look at the stock price. And I'm like, well, you wanted to go IPO, you're going to have to deal with, the volatility of being a public company. And not every day is an up day. So it took the employee base sort of to get used to that. But again, we feel really good about it, and we feel like we've been able to attract the right people and do the right things with, how we're capitalized. So it was a great event for us.
Well, you guys have built an amazing set of products and had a really successful transition from single product to multi-product, embracing artificial intelligence and all of these new services that are available in the competitive landscape today. You've steadied the ship through, I think, what's probably been the most challenging of times for newly minted public technology companies in the last 50 years, maybe. And you've done it with poise, and looking at the stock chart today, it looks like you guys are in a really strong position thanks to your leadership and guidance. So it's a great story, Greg, and really appreciate you spending time with us today.
Yeah, I appreciate it, Brandon. Thank you. And thanks to the Crew Capital team. And I just leave you with the look, this ecosystem of tech startups, there's always somebody who has been through something and can help. And again, building the network and reaching out and learning before you have to deal with it is one of my biggest learnings from my Couchbase experience.